Good morning, traders. It's 8:02 a.m. Chicago time on Thursday, on 4th of August, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Some interesting events overnight. Mainly, the Bank of England has reduced rates, has cut its rates in a unanimous vote. The central bank lowered its benchmark interest rate 25 basis points to a record low of 0.25% as it looks to stabilize the British economy following the Brexit vote. The bank also announced that it would expand its quantitative easing program by 60 billion pounds and purchase corporate bonds. So, and then, of course, Mark Carney, the head of the Bank of England, spoke earlier this morning at about 12:30 Central, midnight, half past midnight here in Chicago, 1:30, actually, yeah, 1:30 a.m., 6:30 a.m. this morning, and 7:30 Eastern. Sorry about that, making the clock translation. Anyway, that's the key news that's driving the markets today so far. It's even though we knew that the Bank of England was going to be close to doing something, the expectation was not for it to make an aggressive move like this. Um, Carney says UK adjustments might prove difficult. BOE cannot fully offset large structural shock. Uh, Post-rate decision. This was during the post-rate decision press. All elements of the package has scope to be increased. So overall, a push to support the British economy with more QE. Initial jobless claims came out about a half hour ago. 269,000 versus 265 expected, so slightly worse. Higher by 4,000. Continuing claims 2.14 versus 2.13. Other than that, there really isn't much on deck. So the question we always look to answer early on during these trader bites is which way is risk moving? Is it risk on or risk off? And this morning, by the evidence of how money has moved, we have a mixed ball here. The market did push to 2160 overnight, and I'll cover that here in a second. Let's look at what we're expecting on the calendar today. We already got our initial and continuing claims. We get durable goods orders at 9 Central, 10 Eastern, expecting negative 4.0. Durables X transports final, expecting negative 0.4. This is for June. We get factory orders also at 9 Central, 10 Eastern, expecting negative 1.9%. So durable goods and factory orders are fairly important numbers. And then as far as speakers, there really isn't anyone on the calendar. As I said, Carney has already held his conference, and then after the market today, LinkedIn announces looking for 78 cents in earnings. Let's shift gears here and take a look at what we expected yesterday. So yesterday, for those who were here, we went over all the pieces that put our plan together, and we talked about the fact that the market had dropped finally to clean up some of the structure below. We talked about how on Tuesday the expectation was for any drop to consolidate at 2146. We had a point of control at 2147, and the expectation yesterday was for the market to have an open auction, but eventually to drop down into the 2147, 2146 area. And then the primary hypothesis is for a push to 2157, 2158. I talked about the 2157 at length yesterday, explaining that it is the midpoint of the swing from the all-time high 2172.75 down to 2141.5. 2157 being the mid, but also that it was the key LVN right here left behind on Tuesday's drop. And I also warned, for those who are here, I also warned that that there's a potential that we would take back this entire sell-off, because that's what it has been doing. It's been pushing down and coming back up. But overall, yesterday, Hypo 1 was in control, which hasn't happened as often as it normally does lately. The auction, by the way, well, I'll show you on the trigger chart, the auction over the last few days has been much, 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 much more orderly than the auction has been over the last 2 weeks. As I've said over the last 2 weeks, and when I was gone, as I said, it is really a difficult trade across the board, whether you're in a trading in a futures-based fund or an automated system or whatever. It's really tough going because the market's tending to flip-flop on itself, and that makes it tougher to read, except for generally for scalping. So Hypo 2 was looking for an open auction, a push higher into the 2157 and the opposite with a target of 2147, 2146. Potential extension down 2137.5. That did not happen. Here's what the market actually gave us. The market gave us a nice opening swing. Again, a beautiful opening swing. So we see that the full range and the full test on the market on open. Market on open orders are what we're measuring with the opening swing. It is not a time-based measurement. It is based on where does the buying shut off and sellers step in. In this case, the opening swing high was 2152. And where does the selling shut off and the buyers are motivated, the initial buyers, and we found that to be 2147, which happens to be the point of control to the tick, and one of our target turnaround areas per Hypo 1, 2147, 2146 was what we were looking for yesterday. And so it turned around and it started to drift up. We got a lot of zippers yesterday. You notice these areas where the market is just unable to rotate widely. A lot of short-term traders, trader action. One of the things I want to show you this morning, a nice feature of IRT, but also let's change this to a volume shade. But if you watch this profile as it's building, you'll notice how the point of control shifts. The point of control is this brown line here. As the day goes on, we can see the shift in demand and supply and value, and you can see how it's building up in this zipper as we move forward. And as the market pushes up, we have a profile that continues to make a P shape and a P shape and a P shape. And if the market continues to make a P shape, in general, it is incomplete. The auction is incomplete. We have what we call a weak high. So you look at that high right there. The high is fairly weak. And notice how the profile keeps shifting its point of control higher and keeps shifting higher and is unable to find motivated sellers as we push into that 2157. So you see how this volume here, just a lot of volume at the high, and so there's no excess. In other words, the market is just not finding those motivated sellers to push it through. It's trading a lot near highs. Look at that point of control moving to the high a day. This is an ideal situation for a continued higher. And what happened here, this was a beautiful setup. We got a midpoint test on a weak high with fairly well-defined risk. The risk for this trade was down here. We start moving into the stem, and you could see how it reacted. It pulled back to the mid, went right back to the point of control. See that point of control shifting down? For those who've been around, since I got on Twitter and 2009 have probably heard me talk about VPOC shifts, and that's a classic VPOC shift there. Demand value moves, and then based on how price responds to that, we get some a floor under the long off of the mid, and now here's the point of control starting to shift up and down, and we finally get the extension up as the profile continues to build. But look at how much more smooth it is on that test to 56 and a quarter. You're starting to see how the buying is tapering off, the buying volume is tapering off. And then as we go into the close, we finally get what looks like a normal distribution profile. So let's clear this, and you can see this distribution looks much more normal, whereas before it was like this. This is just the reason I'm going over this in such painful detail is to show what the process looks like of the auction as the market rotates. These zippers give us an indication of how the market is liking or rejecting current prices, and I pay very particular attention to these zippers. For anybody that's watched webinar 5 on my website, I talk about these a lot, and it's just an indication of how the market's responding. It's not the zipper itself that gives the whole story. It is how the market rotates out, above or below, or retests that zipper. So this pullback here into this zipper is a small scalp setup short. This push into mid is a longer time frame long, and so it's depending on the time frame, you have several things that could be played here. Overall, we did manage to get to 57. 57 is marked here by this pink line. We've managed to get to that target, and then I had talked about right after the close, if you look at my Twitter feed, I had talked about 60.75 being the next key test area. 60.75 gives us the classic test of the point of control, the microcomposite point of control from below. And if we look at the overnight session, what do we see? We see the market open right here, push to 2160.75. This was after I posted that this is a key target. And what happens? Sellers step right back in to bring it back into line. We get this sideways chop until the BOE announcement news comes in, pushes it to 64 and a quarter. And what have we done since then? We have basically moved back on the overnight session. We have moved back into alignment with the where we were at the beginning of the session and where we were on the close. The overnight inventory is flat. It is not long. It is not short, which gives us a clue as to the kind of open we're likely to have, and we're likely to continue to have an open auction type of open. Now we're trading just slightly above yesterday's high. Within the next 15 minutes, we're likely to see this drift a little bit lower and get back into the prior day's range, flattening the overnight inventory and giving us basically another open auction type of open. But the key thing to take away here, this key news that I talked about with the BOE cutting rates, has not really had that great of an effect on the market. Even the DAX and the Euro stocks are only up 0.5 to 0.6% this morning. Really not that great a reaction there, but who knows? We'll see what happens when the U.S. opens. But overall, the overnight session, a very boxy profile. This basically says that the market has not found any consensus, any real consensus. It is trading all the way through from the 2160.75 down to where the value low is overnight at 2156 quarter. It's trading through those prices. The volume at 221,000 is just slightly above what we would consider to be normal. It is still, or most common, it is still normal volume for the overnight session. So there's nothing to glean there except for the fact that we have pushed We had an impulsive move high on news, and we've almost returned to the scene of the crime back down in the 2156 area, and this is expected to drift down and move into yesterday's range before the open. So if it does not, it'll give us an open auction out of range. And now let's take a look at how this profile is responding. So as we add yesterday to this, we can see that we're filling in this area right here. We are above the cutoff, the low volume node, and we're filling in this area just above the composite low volume node. And overall, we're moving back up towards the point of control. And that's why I announced the 2160.75 being the key area. Could be the key area to test above, and we did, because we have tested, we have moved down. So here's the move down. We've moved down through this valley. We have retested this point of control down here, an old point of control, which is now an HVN. We've moved above the low volume node and are working ourselves back to the 2160.75. As I cautioned yesterday, this market is likely to take back the sell-off with an overnight high at 2164 and a quarter. We're basically back up to where we were right before the sell-off 2 days ago. So that's a lot to digest, but overall, we finished yesterday. If we look at the market profile chart, we have moved, we see an excess here. We have moved away from that excess, and now we're filling that excess back in. Chances are we're more likely to take this whole area back, this whole excess back. So caution if you're very bearish. This is likely to continue higher today. So the key expectation this morning is that it's likely to open in the prior day's range, probably out of range. It's likely to open in an open auction out of range. It's likely to test down this morning early. I expect it to base, and then I'm looking for it to push back into the 2160.75, chop around in here because it is the MC point of control, and then I'm looking for this this naked point of control to likely be tested 2164, giving us about 10 points of range to the upside. That's what Hypo 1 looks like today. If we don't get that and we get an early test that is higher, either with an open auction or not, and we push up into the 2160.75, chop around and start moving down, then the targets are going to be this 2153.75, the point of control, and then it's likely to move back into that 2149 LVN, and that will be the extended target down, and that gives us about almost 11 or so points of range. Not expecting great things here with this market the way it is, the way it's shaping up. We are still in this large flag. Let me pull that up and show you how, just so you're not losing sight of the big picture, we're in this big flag that we're having a hard time getting away from. So here's the break. There's the break. That's the break from early July. And then we're in this flag formation, and it's more likely to continue higher. This is just basically a big long-term zipper that we're a part of since 7/14, since July 14th. And let's not forget the big picture and what's going on there, because that's where the money is. The money is looking at the higher time frame, not the sub-minute time frame. We're not really, HFTs don't really drive the market. It's the OTF that does, in my opinion. Anyway, I'll leave you with that. Stage 5 traders, as you know, today is our walkthrough. We're doing a full walkthrough on the NQ. Hopefully you can attend that. For everyone else, please mind your risk. Again, we're still in the summer doldrums. We want to be very picky. The ideal situation for you is to pick out, you know, essentially you should be trading around half the number of times you normally do. Pick out your spots very carefully and manage your risk. I'm seeing a lot of people just throw away money on dull markets, and it just does not make any sense. Do not trade what's in your head. Trade what your eyes see. So don't come in with a preconceived notion of what the market should do. That's very, very costly. Good luck, and I'll catch you tomorrow. Take care.